Well, hello everyone. K Kim here from the Traders Club, and thank you for tuning in. Let's continue with our midweek update. Again, my name is K Kim, and I hope you guys are enjoying your night. Tuesdays and Wednesday. It's around 5 o'clock here in the Twin Cities. Let's just look at the. Let's start with the Nasdaq. I want to look at the Qs first. And let's go to a spider and possibly look at the Russell as well. And so obviously when we look at here, with a huge volatility here a few weeks back, actually that was about a month back actually, and then we talked about, we talked about this level right here. I tweeted out the chart on the Nasdaq, this being important pivotal level because this is what we call overhead supply. This is a level that has been acting as support, back here July and at around May as well. And also, you can say that around March and April, this was an important level, right? So this is an important level, and you see the market, the Nasdaq bounced back up to that level. We threw that shooting star candle there. We're pulling back. Also, that was an important level as well because we also had that falling resistance level at the same time. So this was a pivotal level, not to mention there was a 50 MA hanging around in this vicinity. Same thing with that 100 SMA here. You can see that 100 SMA, 100 simple moving average acting as support in the past and then now becoming a resistance. So you can see that a lot of technical levels in this vicinity here on the Qs around $107 level, and so we're falling back. But the candle, the great things about candles is that, well, they tell stories, right? Obviously this big guy is telling a story, and then these guys are telling a story as well, right? So if you really want to look at this like a micro term, I guess you can argue that we're flagging as it comes lower, right? You can say that. You see that we comes down. We come down and we flag it. That's what we call bear flag. And we gap down again and we're flagging again. And that argument is valid. You could say that it's a micro term. We're in the bearish trend. Again, looking at the micro term. We're just talking about maybe tomorrow or next day or so. So looking at this here, looks like we are, forming some kind of a bearish, flagging pattern that could suggest that it could go lower, but we have to keep that in mind that we are dealing with a very volatile market, and keep in mind that we had something similar happening in the past where this thing went up and then came down. This thing looked like came down here and then we flagged it here. You see that? So okay, so I'm just looking at this past action back in August here. Actually, early September here. So we came down and we flagged it, and then we are coming down again. And so at this point, many can argue that this will continue lower, but keep that in mind. It's the probability that it could in the minor to micro term. However, just because we're dealing with this kind of a, lots of volatile market because of fear and greed at this point. There's a lot of fear in the market, but there's also a lot of greed in the market. So then, logically you can think that, hey, this potentially have continuation to the downside, but then we gapped up and then we had that move, at least in a micro term, continue higher with that gap up. So what I'm trying to say is, yes, we're forming something in a micro term, looks like a bear flag. However, because we're dealing with this market with a lot of volatility, I wouldn't make this as an absolute that it's going to continue, although it can. We are below 1020 MA today, but let's look at a little bit more of a minor to intermediate term. So we just looked at this as a micro term here, and then we forecast that there's potentially continuing lower. Also considering the fact that we're dealing with the very volatile, a lot of fear and greed in the market, so anything can actually happen. Really, we could just gap up tomorrow. So we just cover that. But let's look at more of a minor to intermediate term, right? Minor to intermediate term there. So when we look at a line chart here, what we got going on in the minor to intermediate term is we actually are forming, at least on the Nasdaq here in the Qs, we have what we call higher high and higher low. What does that mean? We're forming some kind of trend here in the intermediate term. You know what I'm saying? So this is the vicinity of a higher low, right? This low is higher than this low. this is a vicinity where it could potentially be a higher low. Does that make sense? So as long as this thing doesn't come lower than about $101 on the Qs, it is considered we're still in a cultivation of intermediate term uptrend. So keep that in mind when you're doing analysis. Using the charts and implementing technical analysis, we have to understand the micro term, minor term, intermediate term, and primary term, and the sentiment is gonna change, or it's gonna be different. So we have to put all that together and then come to a certain conclusion or a direction, at least in the next minor term. You'll be looking like next couple days. Intermediate term, you're looking at maybe several couple weeks to a month. Primary term, months to years. So really though, when I look at this, when I just looked at minor term here, we also looked at the intermediate term here. Definitely, this is a very, very strong level. It's coinciding with the resistance level here. So obviously, we really if you're a buyer at this point, what you want to see is that the price action getting well above 107, 108. If we can stay above 107, 108, then I believe that the market could find a lot of buyers here, and NASDAQ can attract the buyers because NASDAQ is the strongest index at this point. So if you can see the NASDAQ getting this level and stay above and hold above it, because again, we're dealing with the volatile market that there might be a lot of head fakes and shenanigans that happening at that level. So if you can do that, I think the buyers can find some confidence and maybe attract more buyers in the over market here. However, if you're a seller here, what you really want to see on the NASDAQ is you want to see this thing getting below 100. It's not guaranteed that if we get below 100, this is going to go to nothing, or we're going to have a complete crash. I think the next level support will be 94 and some of those levels. But I still think that this vicinity is a level of fear. Okay, this is where a lot of fear is going to happen. And probably some of these levels is going to be more confidence of buyers, a kind of a fear / confusion. But anywhere below this level, we were panicked. So if you're a seller here, then you do want to see Qs getting below 100 here and continuing lower and possibly getting below 94 there. So kind of look at it on a daily basis and look at these levels as a reference point and see from there. Obviously, looking at, I've done long-term analysis on the indices, so I'm not going to do that today. Go back to my blog and look at my long-term analysis if you want to get an insight on that. So let me look at Spider. And then we'll just kind of wrap. Well, we're gonna look at Apple and Tesla and Google, and then we'll wrap this up here. Apple is actually looking much weaker than NASDAQ. For the fact that they attempted, or at least the buyers attempted to make a run for it, got caught on that 50 MA, and then we threw that shooting star candle there. We gapped down. We threw a bear flag. We gapped down again. We're flagging again. Very, very similar price action when it comes to micro to minor term there. But when we look at more of an intermediate term though, you can see that it's not as confident as the NASDAQ is, but we are trying to cultivate something here. You can obviously see that we're still in the vicinity of a higher low here. This low is definitely a little bit higher than low. So if you're a buyer here at this point, really we are still in this level of a fear. So in this vicinity here, as I draw here, below 200 on the Spider, above 192, this is a level of fear where you don't see a lot of volatility. It could be a lot of up and down and stuff like that, so keep that in mind. But if you're a seller, you want this thing below 190.73. If we can get below 190.73, probably next support is about 187. After that will be about 182. If you're a buyer here, there are a couple levels that it needs to get above. This is kind of a confusion level. This is what I call fear vicinity, confusion, buyer confidence. So obviously the Spider is a little bit weak, much weaker than NASDAQ, so we need to get above 205 for buyers to see some confidence. But for at least an intermediate term bullishness to continue on the S&P 500, we really want to see this in getting above 200 and 201 and hold above at least for 2 to 3 days, and then kind of get back up to, this is where again overhead supply level here. This is a resistance, prior support that could possibly become resistance. Again, 204, 205 on the spider, okay? 204 to 205 on the spider. If you can get above that level and then possibly, you know, stay above it, and then what you want to see is staying up at 205, 206. If you can do that, I think this could be the level that the buyers can completely turn around. This is above 205, 206 will be the level that you will see the buyers could potentially completely turn this thing around and continue in a primary term uptrend. But 200 level on the spider is an important level. If we can get above that, I think that, you know, there might be a little bit of momentum going on here in the intermediate term. But obviously in the minor term, we have some concerning matters here after the shooting star. We are seeing follow through. So potentially right now the probability is that, hey, it could potentially continue higher unless we get some kind of bullish run tomorrow, maybe another gap up or something. Because again, you know, these days look bearish as well. These right there look bearish. So you can't just make that as an absolute just because with a bearish days, last 3, 4, 6 days, that it's going to continue lower. Keep in mind the environment that we're dealing with, the psychological level of a trader's investor, the sentiment of these traders and investors. You have to keep that accounted for as well. And so really this is, you know, if you really want to look at things in a micro to minor term, you really want to look at a data on a daily basis. But keep in mind that you can't only look at a minor term, micro term data. You also have to look at an intermediate term and then come up with your conclusion there. So you know, looking at S&P 500 on the NASDAQ, I think the volatility will continue. I think it's a 50-50 chance the market is going to continue lower tomorrow or continue higher. But if the market does gap up tomorrow, I think that could give buyers some momentum and continue higher, possibly back up to 200. If market goes lower, we're probably going to test some of these levels at 190 here on the S&P 500. Let's look at Apple here. Quickly, Apple's actually holding up quite well in my opinion, despite, you know, we were seeing some lethargic action in the overall market. You know, if I just go to line chart right here, you can see that this is an important level. A lot of times, you know, if you're struggling to find certain pivot levels when you're looking at the candle chart, what you want to see to go to your line chart, then sometimes it's very, very clear where the pivot is, right? You can see that that was all support. You can see that this is all resistance. You can see that now acting as support. It's a very, very, I mean, market isn't always going to give you that clear, crisp pivot levels, but Apple it tends to respect these levels pretty well. I mean, look at this right here, right? All resistance, or I mean, all support becoming a new resistance. Apple tends to respect these levels quite well compared to other stocks, right? And a lot of times when you go to just candles here, it's kind of tough to see where the pivot is gonna be. It's right about here, but that with the line chart. So I think, you know, looking at a minor term here on the Apple, you can see that, you know, if we can able to hold this level, next level of support that it needs to get above, it's around 116.27. We stay above that, and keep that in mind. This is a 50 MA. This is a 50 MA, daily 50 MA that act as resistance as well in that horizontal resistance. So we can get above and hold above it. Next resistance will be about 120. So if you're a buyer here, what you want to really see is getting above, well above 120, kind of reclaiming these moving averages. If you're a seller, obviously, you know, for the minor term, you want to get below 113, and then ultimately you want to get below 108 as well. So we're kind of in this, again, in this vicinity of fear, right? They're buyers and sellers here. The buyers are fearful because they do not know that if the Apple is going to continue higher or it's going to completely roll over. Sellers are fearful because sellers doesn't understand that, you know, they don't completely understand that this could be this major higher low in the major primary term before continuing a primary term uptrend. So that's what I'm saying. We're in this kind of a, you know, buyers and sellers that they're both fearful, and so they're slowly trying to figure it out. You know what I'm saying? Because you can see that after that tankage, we're trying to grind higher, but you know, for this really turn around, I think I really propose that above 120 is the absolute level. If we can stay above it, I think then potentially, you know, we can turn things around on Apple there. So quickly, let's go to Tesla, and I make this video not long like my other one, so it should be done here in a couple minutes. Looking at Tesla here, you can also see that, again, Tesla is not going to respect these pivot level like Apple did, but you can kind of see some of the levels here. You can see that this is old resistance, now possibly becoming as a new support. So next, where's the next resistance here? About 269 on Tesla. So if you're a buyer here, obviously, you want this thing kind of get up here, kind of use this as a support. If we pull back to about 259 and then thrust higher, then we'll have continuation of an uptrend. And if that's the case, I think Tesla will continue grind higher to the upside. And I think actually the Tesla is doing quite well despite the market volatility we're seeing. We actually cleared the resistance. So, and if you're a seller in Tesla, at this point, really, what you want to see is, I don't think this is a level to be a seller, to be honest with you, on Tesla, unless this thing gets below 238, 235 or so. If we can do that, then possibly then this could potentially be the primary, like intermediate term lower high, and then we have the tankage. Right now, Tesla looks like we're gaining a lot of momentum. Tesla is one of those stock that it gets hyped up. Once it get hyped up, you can expect some big move. But a lot of times when it loses steam, it just tanks at the same time. So it's one of those stocks that are very, very, it's moved by emotion, moved by traders and investors mood. And so it's just a lot of is up and down and stuff like that. But when it does move, it moves quite well. So standing up through that 10 EMA here, we got all these moving averages crossing up here. So it appears to be that Tesla is looking more and more bullish here as the days go by and holding up quite well today as well. Let's look at Google. Obviously Google, long term it looks great because you can see that how we came across that potential. You can look at it more of a channeling action, and we came out of it after the earnings. We came back down to that old resistance new support, and we're bouncing back up. So I really think that at this point, long term Google looks great. We've been holding Google since I think around early 2015, and really this is one of our long-term strategy that I think Google is going to do. Especially if market stabilize itself, I think Google's worth about $800. It could take another year or two or so if we can get there. But sometimes when Google moves, it can move very, very quickly in certain targets. So, if this thing really, if market really gets up there, it can get here. Even several months or so. But anyway, this is a very, very important level that Google needed to hold. We did feel all that gap that happened earnings, but again, this is an old resistance level that has acted as support. We bounced back up, but we do have a kind of minor to intermediate term resistance coming up here, lower highs. And so what you really want to see is, first thing you want to see if you're a buyer here, you want this thing getting up above here, in this vicinity, in this level of 669, 670. And if we can do that, I think the next resistance will be about 700 level there. If this thing pulls back next couple days, what you would want to watch is 6027, 6026 level. And if you're a buyer here, you really want this thing to hold and then get back up. But if we get below 626, we might want to see this thing coming back to that 10 EM or 100 SMA, 200 SMA there, and then that's the level to it. If worst case scenario, you could come all the way down to 575. So you can see that these levels are, obviously not an absolute level, but it's at least it's a reference point they can use in your trading. So today I thought I would make this much, much simpler for you guys. Plus I got other things to do, so I'm gonna spend too much time. But hey, if you have any questions or anything like that, feel free to tweet me on Twitter. I rarely check stock tweets, so I apologize. I check like about once a week on stock tweets, and Twitter once a day. My blog, feel free to leave comments on my blog. I get notification on my phone, so I can, you'll get, I'll reply to you right away. So. Or you can always email me with any questions or comments. So have a great night. I'll talk to you guys next Wednesday.